Hello and welcome to India Market Open. It's Thursday and global equity markets are celebrating that there is no news is good news for now from the look of what the Fed has done. And good morning, guys. It seems like we might get a leg up, a little bit of a leg up this morning.
I think so. It's been, a good flow of news.
There is news, guys. There is news. Why is it no news?
No, there is news, but the news is that
I'll tell you what the news is. That my two co-anchors have decided to wear the dot plot on their ensemble today.
Yeah, I think you're getting a little dotty with age. But no, the big news, of course, this morning, all about the Fed. And when Samina says no news, she's right, because the interest rates haven't changed. But that was expected.
Yeah.
That was expected. What's also stayed the same is the dot plot, which is I would say an amalgam of all the Fed members, the FOMC members' views, has once again reiterated after January that they see 3 rate cuts this year, totaling up to 75 bips. And that's what's really cheering the markets. Having said that, of course, they see inflation going up, they see the economy also growing up, and we'll go to all of that in detail. But overall, I would say good indicators.
No, fabulous. One, the dot plot, and two, Powell saying that it'll be soon be appropriate to slow the pace of QT. That is such a big statement. I mean, in some sense, we've all been talking about how they have been reasonably hawkish, not too focused on growth as much as focused on inflation, but now coming out and saying that QT might be slowed for risk assets. I think it was music to the ears.
No, but let's just break this down, right? For people who, I mean, for a layman, cutting rates means the economy is not doing well. If the economy is not
inflation is under control,
or inflation may or may not be under control, because eventually if the economy is doing well, it would fuel inflation, for example, in India, right? This is where I think most people get perplexed. So the cheer should be that there are no rate cuts at all in life, because that really means that you're in a good place generally, right?
But you want Goldilocks, right? You want the porridge
Goldilocks
which is not too hot, not too cold. That's
no, also
best case scenario.
And also from a risk asset perspective, I mean, one would love that the pace of hike has been so steep that for risk assets, valuation multiples to become a lot more reasonable, rate cuts are so welcome. So rate cuts happen, central banks are doing this. If QT is slowed down, all of that will fuel.
But I do feel like rates may remain elevated for longer than initially anticipated, more than likely. Of course, there was one article that I came across where they said the Fed, even if wants to stay neutral, they may not be able to, because their reputation now is at stake, because they've gone back and forth so much, and with elections around the corner in the US as well.
But if they're saying 3 rate cuts this year, you have to start them at some point from June. So that's all now in. All right. So
but the good news is it means very little for us, because our markets have largely been driven by domestic inflows. So
no, it's great from our market's perspective as well, right? Because everybody's saying if the Fed doesn't cut, how will Shaktikanta Das have the ammo to do so?
But we talked about this too. There could be one rate cut where Shaktikanta Das might have to do.
Yeah, but this is just favoring
the rate
it, right?
differential will eventually play out, because
So guys, let's get to the global news flows and then what happens today. And we're going to have a more detailed conversation with Jeff Dennis ahead on exactly this. What does this mean for our markets? Why this is important? Meanwhile, the bottom line, whatever Powell said, and of course, as usual, he's sort of hedged both versions. He's saying that I still want inflation to come down to 2%. The dot plot shows it might not, but the 3 rate cuts for this year has been reiterated. As a result, you've seen US indices rally to close at all-time highs after the Fed meet. It's just a stupendous response in the US markets that you saw across the board. So that has been the good one. Very quickly to take you through the highlights of what has happened, and we discussed a few of them, but I just put those in pointers. The Fed has decided to keep rates unchanged. It's reaffirmed 3 rate cuts this year. That's through the dot plot, or the SEP, which is actually the technical term. And because it's 75 bips, the implication is it will be 25 basis points each time round, possibly starting from June. That's what has been taken as a positive. On a bit of a, I wouldn't say concerning side, but also to balance that out, the fact is that the GDP forecast has increased from January to 2.1, which was 1.4. Now it's 2.1%. That means you have a hotter than expected growth. The point that Samina was making, that if you have hotter than expected growth, where is the rationale for cutting rates? Same with inflation. Core PCE is expected to go up as well. And the projection has also gone up, but by 0.2%. nevertheless, if there's a Goldilocks scenario that the Fed wants, this is probably the right point for it. And we'll play out in a bit what Powell is saying. But I want to quickly tell you what's happened to bonds. Nothing too much. It is benign. I would say the US 10-year has been benign at about 4.28%. So not too much movement there because on balance, everything sort of evens out. Crude's been okay. Crude saw, a bit of a downtrend, but then has come up again because inherently there are concerns as far as crude is concerned. So Brent was at about $86 a barrel. Asia has really at least started in celebration. And let's pull up and see what Asia is doing now. Nikkei completely was zooming about 1.5%, 2%. Look at the Hang Seng, 2.5% up. Let's quickly just look at the implied open as for India and see what it looks like for us. Are we also participating in the party? Yes, we are. By all indications as of now, we're joining that sort of post-Fed party this morning, and let's see if that pans out. Flows were nothing great to speak about. There was some FPI selling yesterday, evened out by domestic investors. So quickly, the fund flows before we go on to the trade setup for the day. But, that's going to be the big story where you do have, the FIs, DIs pretty much balancing each other out, where you have Fed speak as the big indication.
And the yields coming off really helping the risk asset sentiment globally. So keep that in mind. 22,000 strike is now where the maximum call open interest is centered at, and therefore if the markets stay higher for over an hour or a couple of hours, and if there is some bit of covering here, then that might just help the market. So that's essentially the key point for the trade setup today, that from a setup perspective, it was the 22,000 call, strike call, which is the most important thing, and let's see if there is further covering out there. It's difficult to make a case for sustained gains due to valuation issues at the small cap and mid cap end of the market, you have to admit. But be that as it may, today could be a different kettle of fish altogether. And while people are talking about staying away from the commodity linked stocks, so while crude has come off a little bit, but rubber prices have gone up, so watch out for tire companies, don't go out and bet them, because the quarterly numbers as they start coming out from April will not show good performance there. OMCs could be an interesting kettle of fish as well. But I think the stronger stocks which are impacted by price or policy cuts are now coming to the buying table. Yesterday we saw Nomura speak about it. Samina probably going to talk about the OMCs today, and we're going to talk about OMCs a bit later on with Probal Sen as well. There's also a talk of MGL, I think, today, and we'll probably talk about that too. So anything which is strong but impacted quite viciously in the last 15-20 days because of price or policy action is now coming back to the table on the buying side. So watch out for that whole bucket.
Well, I think we were ripe for a bounce back, at least in yesterday's trade. It's gone home flat, which has been a bit of a relief. Volatile, though, nevertheless, like Niraj indicated. But of course, with these very strong global cues coming in, it is setting ourselves up for a strong opening. If 21,900 gets respected and taken out, it could actually mean the next leg or the breakout of this consolidation phase for the Nifty. Well, I think, Niraj, what I want to quickly talk to you about is Bank Nifty. 9 straight days of a lower close on Bank Nifty. And I think that is the struggle. So if Bank Nifty doesn't pull through in today's day of trade, I'm not sure how far the Nifty can go from these levels. And I guess we've got to get that piece of the puzzle, right? That's one. And secondly, while you talked about risk assets rallying sharply post the Fed's meeting, gold, which is not a risk asset, has actually gone back to record highs. So I'm not sure what asset is not going up. Bitcoin is back to 67,000, so that's risk. You've got equities doing well. Crude, that usually is considered risk on, is actually eased off. And gold, which is a risk off, so it's usually a hedge, has also rallied quite sharply in trade. Remember, gold has an inverse relationship with interest rates. So if there are 3 rate cuts, gold traders would be long gold as long as there is no reduction in the number of rate cuts. So it's a mixed bag in every sense in terms of what we are picking up in terms of cues. But for now, a gap up on the street is what we are eyeing. Lots of pockets of interest. Whether or not this is sustainable is going to be anybody's guess, but I guess we'll cherish what we have for now on the street. Well, in terms of stocks, not too many stocks that are going to be driven by news flow, so smaller names in that sense, but one that we'll be tracking, and this was an exclusive by NDTV Profit. It's Walkart's QIP. We've talked for the last few months about how they've talked about raising funds for the aggressive expansion plans, debt reduction. Finally, they've confirmed yesterday evening to the exchanges that they're launching a QIP of 570 crores. The QIP base issue of 350 crores with a green show option of 220 crores. The issue price is going to be 517 rupees a piece, which comes in at a 5.5% discount to yesterday's close. The equity dilution would be about 7.11 post this one. What you want to keep in mind is we don't know how this has got lapped up or what the response is going to be. 26 March is when they will be regrouping the management. But it'd be exciting to see how Walkart opens up. Remember, this was our exclusive and you heard it first on our channel. So no surprises there on Walkart's QIP, a big one there. Apart from that, railways seem to be having it quite well in terms of order wins. RVNL has emerged as the lowest bidder of Southeastern Railway project. The contract is valued quite big. It's 167 crores. The timeline for execution is 18 months. We will try and get a sense from the management in terms of the cash flow cycle on this order too. Well, we've also had one brokerage report, and I want to bring it up on IOC. Also, we will be talking to an OMC specialist later on in the show to get a sense of what's really happening, because up until 8 weeks ago, brokerages were upgrading their targets on OMCs, and now it seems that there are downgrades coming in fast. But Citi maintaining its target price on IOC. They've said that the sentiment has dampened by a cut in fuel price and an up move on crude prices, impacting the profitability of PSUs. But they did say that the price cut, remember, is temporary. OMCs are relatively well priced as compared to other public sector undertakings, and the recent price correction is actually a great opportunity for investors to go out and buy some of these OMCs. In order of preference, they like BPCL, HPCL, IOC and HPCL. So it's OMCs that continue to look good. And traders still not enjoying this for now, but I think for an investor, this space and this opportunity is actually a good time to go out and pick up some of those good OMCs at these prices after the recent correction.
Yeah, because the big, negative of rate cuts at the pump perhaps are behind us. So that there definitely could be a case, and we'll talk more about it. But just talking about another sector which might be in focus today, I think we should look at the IT stocks. Neeraj's favorite, which he's been very, not right now bullish on, but I reckon IT stocks may have a good day today. You're likely to see that once the rate cuts have been underlined. And look at the dual combination. Fundamentally for IT, it's not bad at all. You're going to have an improvement in the economy, maybe better spends coming in from customers of our largest IT companies, and a benign sort of interest rate scenario also helps. So I would look at some of those IT counters today, maybe.
Just a small interjection there. One, I mean, of course, we don't form our views, but remember, between yesterday and today as well, I know Samina was saying that how, we've spoken about IT in slightly constructive fashion in the past, and yesterday we were talking about how there is very less room for an upside. But one of the pillars on which you can make a bear case for IT is that what if the rates would not be coming off, because that doesn't re-rate the valuation multiples for tech at large and IT services in India. If this were to happen, that changes at the margin something. So therefore, some bit of upside because of that thing comes in, even if the demand commentary doesn't change. So I'm just making a case out here.
Are we of the opinion that a 25 basis point rate cut is going to increase demand and order wins for the IT sector?
No, the multiples for the space, for all tech stocks because of the interest rates, would definitely change.
So it's an investor sentiment as real business recovery,
it's investor sentiment.
On the DCF, the valuation multiple.
Yeah.
On the DCF, the valuation multiple.
So
but not a sentiment, but because of DCF.
So my I wouldn't say argument, but my pitch is that today, because of investor sentiment more than anything else,
the stocks might
you're
see a positive
going to
reaction.
see possibly a positive reaction, and then what you pick from there is, of course, the long-term view, and that's what's important.
And then we go back to Niraj's yesterday's conversation.
And then we go back to that, and we'll speak to all of our experts on it. But the other stock, and Samina spoke about railways, I'd just like to add Jupiter Wagon there. This is a space which went hot and then went cold, but the fact is that the order flows and the movement in this space is at breakneck speed, because you have governments planning 5-10 years ahead. So that doesn't change no matter what the stocks do. So having said that, Jupiter Wagons becomes the first Indian rolling stock manufacturer with its own wheel planey. So they have acquired something called Bonatrans India, at 271 crores, which manufactures rolling stock wheel sets with a production capacity of 20,000 wheels and 10,000 axles per annum. So this reduces costs and dependency of imported wheels. So if you look at it in the big picture, and I just want to zoom out on that for a second, you are trying to develop this Make in India next leg for export orientation, and Jupiter Wagons is setting itself up for that. So I would look at that. Sapphire Foods, the other one, and this is basically an NCLT approval, so maybe an overhang moving out of the way. They've approved scheme of merger of absorption of two players, that's GPPL, Gamma Pizza Craft Overseas Private, and Gamma Pizza Craft Private. These are distributors of Pizza Hut in Sri Lanka, essentially. So this was on the anvil, and NCLT has sort of cleared the decks for that. That might be a sentimental positive as well. More on my list, but after you're done, Niraj.
No, just the top 3 stocks on my radar, Samvardhana Motherson and KPIT. The reason I say this because amongst everything else, Japan export data came out and rose for the 3rd straight month, but predominantly led by autos. Japanese auto exports have surged to the US and the EU markets, and therefore suppliers or companies that work with Japanese auto companies could benefit from this. So let's see if there's a sentimental uptick there. Could be a positive for Samvardhana Motherson in particular, but some of the others related to that space as well. We're talking about brokerage notes. Jefferies on MGL is an interesting one. It's a buy. The target price has been raised to 1540 versus 1515 earlier, which is about a 22% upside for MGL from the current market price. Remember, we talk to the management tomorrow on India Market Open. They say that the stock has corrected 20% after the recent price cuts that they have taken. The margin impact of the price cuts, however, according to Jefferies, is cushioned by the decline in the feedstock cost. They expect margins to remain at the upper end of the FY25-26 guidance. And they say, more importantly, that valuations are at close to less than 1 standard deviation or -1 standard deviation as per the long-term average, which presents an attractive opportunity to enter, which I believe is the case that both Citi and Nomura are making on OMCs as well, and Jefferies is now making on MGL. So watch out for that one. Lastly, very quickly, because I think we have Jeff Dennis up and a lot of other stocks to capture, but Citi on NMDC is an interesting one. They sell with the target price of 180 versus 215 earlier. They've opened a negative catalyst watch on NMDC because they believe that an iron ore price cut is imminent because domestic prices are more than 25% higher at a premium to the export parity, and 100 rupees per ton change in fines impacts the EBITDA by 4%. So if a price cut comes in, NMDC would correct. Let's see if NMDC sees a bit of a corrective move today.
Yeah, just 2 quick stocks, and this is not on back of news this morning, is Eicher Motors and Maruti, 2 that we'd want to watch out for in terms of today's trade as well. Both had a stellar performance in trade. Maruti, of course, made a new record high. Stock was up 15% in 2024. CLSA's come out with a pretty aggressive call on this one. It'd be interesting to see how the counter actually plays out in today's trade of trade. That's Maruti I'm talking about, if you can pull that one up. Eicher, on the other hand, was up 5.5%. UBS has anticipated a 34% upside, and the markets clearly got very excited on back of that. And you saw a 5.5% up move. Be good to see whether the gains continue into today's day of trade. But I'm assuming there was quite a bit of delivery activity on both these counters yesterday.
Yeah. And we had an interesting chat with Shashank Srivastava yesterday, which was really fun because it came at a time when JSW and MG were launching their EV, and they said, we want to be the Maruti of the EV space. So it was great to get Shashank Srivastava on that. And, you know, him talk about even if Maruti's EV plays in 2025, he doesn't think they're late to the party. Just a couple of more I would add, maybe Prince Pipes, if you want to look at. The company has signed an agreement with Klaus Warren Fixtures and NM Shah. They're going to purchase the Aquel brand and other assets. Not a huge sort of an acquisition, 55 crores, but greater value built in their bathware segment. And Prince Pipes has been definitely interesting. And then, of course, we have BNP Paribas on Bajaj Finance, where they've initiated coverage with a target price of 9,000.
9,000, guys.
Yeah, 9,040.
And Bajaj has had a good run.
Yeah, has started off very quickly. Now, just before we go to Fed, just wondering, Samina, any updates on Wockhardt, QIP? You mentioned about it, demand?
Yeah, the book was full, so well subscribed, and I don't think that comes in as a surprise. Of course, we've confirmed that. So it came in at a 5% discount. Remember, the confirmation came in from the management yesterday, and we do believe that the book has been fully subscribed. So it'd be interesting to see a reaction on Wockhardt this morning. The stock, remember, has been active. Mr. Korakiwala has aggressively talked about their very ambitious plans, debt reduction being one of them, getting rid of non-core assets was something else that the company and management had indicated to us earlier.